Hi everybody, this is the live market open for October 5th. It's a Wednesday. This time it's a recorded show. My name is Yochai, I'm a Forex Crunch and market movers. During the show we will not have a recorded show. So as always, we'll start with recent development, talk about various charts and levels, preview the non-farm payrolls on Friday, and focus on our currency of the week. It's pound dollar, as it reached 31-year lows. And of course, we'll preview next week. All right, so what's going on in markets? In political news, Clinton is making gains. There's a wider effect after the first debate that she's gaining more ground. As we discussed in the show many times, markets usually prefer Republicans, pro-business, pro-market, but Donald Trump is more of a wild card, and they prefer mainstream candidate like Clinton and more uncertainty. Into the debate, there was high uncertainty. The polls were quite close. Now they're leaning towards Clinton in a more meaningful way. So this is a risk-on thing. Another risk-on thing is the OPEC. Last week, I must say, I was surprised. Well, it wasn't a full agreement. Markets are poking holes a bit about that. Analysts are doubting it. Details are missing, but the idea is to curb oil output in the OPEC meeting, in the formal OPEC meeting coming on November 30th. So that's also positive for markets. On the other hand, we have banking troubles in Europe, and Deutsche Bank is the protagonist. More troubles with their profits, the slap that they got from the American authorities. So this already has some impact on the euro. So when on Friday we discovered that the fine that they might pay American authorities, the Department of Justice, will probably be lower than expected, 5 million instead of 14 million, sorry, billion, then rallied. Okay, now euro dollar, it remains frustrating. It's stuck in range, but within the range, these news do move the pair. Okay, another euro-related story. We had some talk about taper talk from the ECB. Okay, that's relatively fresh. What's going on over there? So the European Central Bank is expected to extend its QE program that runs through March 2017. Okay, and was expected to remain as is. Now, this headline can be explained as, okay, they're now going to begin tapering in March. That means cutting down QE. That means printing less euros, and that's euro bullish. But on the other hand, like a general idea that when they do decide to cut their program, to begin tightening, then they'll do tapering instead of stopping the program all at once. So we did see euro-dollar rally, again, within range, but it didn't go very far. Okay, so let's go back to the other headlines. We had we'll detail that later on, but in general, there's talk that Brexit will be harder. That means that the UK will leave the single market, and because they're going more for sovereignty and immigration, and this sent the pound to new 31-year lows against the US dollar. We'll detail about the pound in our special segment later on. In terms of data, it was basically all over the place. So US GDP was upgraded to 1.4%, relatively poor, better than expected 1.3, but remember it's and Q2 was quite slow. Data for Q3 is not so exciting. Durable goods orders were mediocre at a drop of minus 0.0. Some than expected, some worse. There isn't a momentum. It will have also the NFP preview. Jobless claims remain low at 254,000. That's good. The Fed's favorite inflation number, the core PCE price index, is ticking higher, 1.7%. That's good, but more good news came from the first hint towards the non-farm payrolls. The ISM manufacturing PMI, it beat expectations with 51.5 points, showing a return to growth in the manufacturing sector. But employment remains on the edge, around 50 points. So the companies in the manufacturing sector are not really on a hiring spree, let's put it this way. In Canada, GDP beat expectations with a rise of 0.5 month over month, supporting the Canadian dollar. alongside OPEC, but we're now in a market mood where the US dollar is relatively strong. Yeah. Okay. More data that came out regarding the taper talk from the ECB. Eurozone core inflation remains stuck at 0.8%. Quite disappointing. And core inflation is rising thanks to oil prices finally moving up just a bit. But again, 0.4%, the ECB is far from its target. UK GDP. UK data will focus on that later on, but it was upgraded to 0.7 quarter over quarter. Good news. Also, the first PMI, manufacturing PMI, beat with 55.4. Also, construction PMI today beat. So, data coming out of the UK looks good. Did not rock the boat. Their purchasing managers indices, well, the manufacturing index came out at 50.1, perfectly balanced between growth and contraction. And Japanese inflation remains. So that's our headline news. And now let's go to the charts. So this is our technical segment. We'll focus on currencies. We'll not jump immediately to the pound, although it's tempting because it's the market mover. We'll begin with at the top, at the world's most popular currency pair, euro dollar. So euro dollar currently at 112.20. I would say stuck in a range. 111 strong support. It worked as a double bottom. High resistance of 80 followed by 113.70. We had a dip towards the lows and then we're bounced once again. Pound dollar, here there's a much bigger drama. Currently 127.40, we reached already a low of 127.20. We broke under the low seen in July. That means the pair is trading at the lowest level since 1985 once again, when George Michael had his big hits. Okay, so another 31-year low for cable. I would say support is immediately here, 127.20. Resistance, the previous line at 127.90, followed by 128.50 and 129.15. Low support, well, that's back to 1985. So it's uncharted territory as far as I'm concerned. Dollar yen did move higher, currently 102.76. Quite a move. We're seeing the strength of the US dollar. We broke above 101. Next level of resistance is 103.40. Let's zoom out a bit. It's a bit far ahead, but we've seen a few very strong days for the dollar, very poor days for the yen. 103.40, 104.14 are the next lines to the top side. On the downside, 101, 199.50. Okay, let's continue. Dollar CAD. Mixed story over there, influenced by these risk on, risk off things. Very much entrenched in range as well, but at least moving more than euro dollar. 131.76 is the current level. Support here at 131.40. Further support 130.80. 130.80 is a veteran line and it's not as strong as it used to be. Further support is at 130. To the top side, we have 132.40 and 133.15. Okay. Aussie dollar tried to make a move higher, but the Reserve Bank of Australia was not that hawkish. The new governor, Philip Lowe, made his decision. He did not make any hawkish change. So basically, where we were last week, I would say, currently 76.35, 76.60 as resistance, followed by 77.40. On the downside, we have 75.30 and 75. Kiwi dollar. The Kiwi has weakened quite a bit, fell under 72, which is round number and also support. Further support at 71.60, which is quite close. And then 70.50, which used to be a double bottom. On the top side, if the pair overcomes the 72 level, we have 73.30 on the top side, and perhaps on the way in between 75.50, which is a weak line. Dollar Swiss remains a proxy for the US dollar and prone to intervention by the Swiss National Bank. 97.77 is the current level. 98.20 remains resistance, followed by 99, support at 97 and 96.60. Remember, bank intervenes in this pair and also in this Euro Swiss cross, which is currently relatively close to the top of the range, getting closer to 110. So we might have seen some kind of intervention here, but it also reflects the strength against the euro doesn't move too much. Anyway, I would say 108 to 110. Each time the pair falls under 108, we see it bump higher, a suspected intervention by the Swiss National Bank, which tells us that they intervene. Euro pound, we're at high levels. We should zoom out here, maybe to the weekly chart even further, maybe to the monthly chart. Currently 88, we're at the highest level in quite some time. Actually, since 2013, all right? So highest level in over 3 years. Next level to watch is the very round number of 90, and then 90.50 to the downside, because these are levels we've seen recently. The whole story in euro pound is the pound. It's nothing related to the euro. Support at 87, which used to be resistance, followed by 87.15 and 86.50. So it's quite an interesting cross, trending to the upside. Euro yen, much more boring, but at least we do have some movement here, mostly related to the fall of the yen. If you can hear in my voice the frustration from the euro, that's true. All the other currencies are on the move, higher or the euro is stuck. Anyway, 115.30 is the current level, 116 is resistance, support 114.50, 113.80, and 112.80. Okay, so but euro yen is trending higher in the past. So this cross remains well, relatively volatile. Okay, from the yen. And here we have the combination of both volatile currencies, the pound and the yen, currently at 130.90. The weakness in both more or less offset each other in recent days, but if we widen, we see quite big moves here in recent weeks, reaching as high as 139, which is resistance, followed by 137.10, 134.40, 133.20, which is strong resistance, and the pair has support under 130, which is of course a round number, at 129. I suspect that one of these currencies will not remain that weak, and they will have bigger volatility in this cross. I mean, weak against the US dollar. And oil prices, last but not least, at 49.13. No cigar. I mean, we're higher. We just surpassed the high level seen back in August. Okay, in August we had a wild range of $39 to $49. We're above this level, but no cigar, no $50 per barrel. Price is all related to that OPEC decision. It's a decision to try to agree on quotas. Lots of conflicts there. Nevertheless, they did agree on something, Iran and Saudi Arabia especially, and the hope that also Russia will be dragged into this debate, to this production cut, is pushing oil prices higher. Again, not out of range. We're not above the post-crash highs of $52. Okay. Anyway, to the downside, 46.50 remains support. 45 was the level that the pair hugged for quite some time, and 42.80 to the downside. Let's see if the pair manages. Let's see if oil prices manage to break above $50 and stay there, not only break, and or if they fall to that range, hugging the 45 level. Okay, so these are the charts. That's our segment of the charts. Before we move to the next segment, let's cover the events that we have on our agenda in the next few days. So if you're watching the show on Wednesday we have the most important of UK PMI is the services sector PMI. Let's see if it beats expectations like the previous ones, but let's see if it doesn't have an impact like the previous ones. I hope it will have an impact because the services PMI is the most important one, usually has an impact. I would not like to see the pound ignore indicators and just move by political headlines. Big hints towards the non-farm payrolls. At 12:15, the ADP non-farm payrolls, the private sector report. In recent months, it came out more or less within expectations, but did not always forecast the actual NFP. At 12:30 GMT, the Canadian US trade balance reports, probably ignored, at least on the American side. More it'll be more interesting for the Canadian dollar, because we have between the around this we have the ADP and the ISM non-manufacturing PMI at 12 GMT, the services sector report for the United States of America. Terrible. It was the lowest since 2010. and it triggered a US dollar sell-off. Let's see if it repeats itself. Oil inventories became somewhat less important because of that OPEC talk, because of the political talk, but still important for oil prices. And remember, oil prices impact market mood. Okay, less oil in inventories, better market mood, weaker US dollar, higher commodity currencies, and of course the other way around. Thursday, relatively more quiet day. Okay, we have the Australian trade balance at 12:30 GMT to begin the day. German factory orders, which are quite volatile, and the ECB meeting minutes just became more important. Usually it's quite a boring document. This time it's more important due to all this taper talk. Let's see if when they talk about tapering, it's related to general discussion or a concrete one related to the current projected end of QE in March 2017. Draghi, Mario Draghi, denied that there was any kind of talk about tapering. Let's see if it's one of those denials that should be ignored. In any case, that will be interesting. Hopefully, it'll move euro dollar. And at 12:30, we have jobless claims as usual every week. Friday, we have one last figure from the UK, the manufacturing output, and more importantly, of course, the big event, drumroll, US non-farm payrolls. We'll have a preview for that later on. And the Canadian jobs report at the same time. So trading dollar CAD will be quite a mess, I would say, around Friday, 12:30 GMT. Okay, so these are the events for today. Now let's continue. So, what we should look out for this time. So, the Federal Reserve is keen on raising rates. Not so soon, of course, very keen, but not now. And we're talking about December after the US elections. But they did make it clear that the case is strengthening, that they're more eager to do so. That means that the bar is low for a hike. That means that if we have job gains of only 150,000, that should be good enough. Okay. In the past, we were always talking about 200,000, but as the US nears full employment, 150 is good enough. We should see more wage pressure, and of course, this full employment is a bit of an illusion. Anyway, last time it was 151, so it shouldn't be too hard to reach that. Wage growth was quite disappointing last time. More or less within range, it didn't accelerate, not what you expect when the economy nears full employment. So last time it was 2.4. 2.5 again should be good enough. We don't need to see 3%. What is expected for the non-farm payrolls this time? A job gain of 171,000, so a bit above that low bar, but under the 200,000 we got used to. Last minute expectations will be shaped by the ADP and ISM on Wednesday. Too much impact, but in the past few months, these figures came more or less as expected, and they didn't have an impact. Last time we had the ISM after the non-farm payrolls, so it didn't impact at all, naturally. But beforehand, both figures did not make a splash. Okay, wages expected 0.2 month over month and a rise to 2.6% year over year. The unemployment rate, currently at 4.9% in the United States, but as all market participants know, the unemployment rate depends on the participation rate. So if we have a rise in the unemployment rate, but also a rise in the participation rate, it's meaningless, okay, for markets. But politicians do care. If we have a rise in the unemployment rate, it serves Donald Trump. If we have a drop in the unemployment rate, it serves Hillary Clinton. Remember that it's not that important for markets. We need the number of jobs gained and wages, okay? All in all, the US dollar looks relatively strong. So not much is needed in the current I mean, the bar is low also for further dollar gains. Again, it's mixed between different currencies, but for the current momentum to continue, we need an okay report. Okay, we need a disaster report, let's say under 100,000 jobs gained and wages falling closer to 2% to really shock markets. Okay, I would say that the outcome this time depends equally on the headline and on wages. Okay, these are the main things. We had a shift towards wages during many months, and now it's back. I would say it's equal. we're not back to the headline, but not otherwise. Okay, so that was our non-farm payrolls preview, and let's go to the next segment. So our currency of the week is pound dollar because it's going down, selling England by the pound. What happened in the weekend? We had the Tory conference in Birmingham. All the big wigs, Theresa May, Philip Hammond, and the three Brexiteers, Liam Fox, Boris Johnson, and David Davis, all had a hard Brexit line. What does the hard Brexit mean? That means they'll insist on sovereignty and immigration. It means they're ready to forego free trade in order to get the full Brexit, the full Monty. Is it a negotiation tactic against the European Union? Possibly. Do they want to please the Brexiteers, those in government and those that voted to leave the European Union? Very possible. But Theresa May does enjoy credibility and her other leading ministers. So markets respond to this, believes that we'll have a hard Brexit, and so another thing that we learned over the weekend is that Article 50, exit clause from the EU, will be triggered if we believe the government, the British government for now, in March 2017. So in March 2017, we have the end of the ECBQE and Article 15. And according to the EU laws, Britain will be out of the European Union by March. So the pound is under huge pressure because of Brexit. It ignores the really good data about the UK economy. Remember, the UK economy percent in Q2, quarter over quarter. That's annualized around 3%. At the same time, the US economy grew by only 1.4%. And data from recent months after that initial July shock from Brexit, the data looks good, but markets don't care at all, not now. Okay, so the fall in pound dollar is also exacerbated by strength in the US dollar. The pair is currently at uncharted territory. Okay, uncharted doesn't mean we haven't been there before, but 1985 is a long time ago. All right, so let's look at the chart. Let's look at the bigger picture now for pound dollar in this special segment for cable. We have it, yeah. So I don't think my chart even features levels from 1985. These are a bit irrelevant. Anyway, to the downside, I would say 127.20 is the level we touch. We're not that far from there. And then I would look at round numbers. 125, you can circle that very round number. It represents 80 cents. If you look the other way, that's the number I would be looking for. If we reach 125, there will be talk about 120 and below. Okay, I wouldn't be surprised also to hear parity talk like we had with euro dollar at the time. But we don't have a crash under 125. Let's look at levels to the upside. So 790, the initial post-Brexit low, 128.50, which was the level that the pound reached just before a new government was formed back in July. I call it the Leadsom line, named for Andrea Leadsom, however her name is pronounced. Following up ahead, 129.15. 130 is not such a strong line despite being a very round number, and 130. Okay, so these are the levels for pound dollar. That's their special segment on cable. Trading times, also against the yen, things are moving, and also of course against the euro. So that's not 1985, it's only 2013, but still of course a meaningful level over there. So that's our currency of the week. And now preview for next week's events. So on Monday, we're back to politics, as on Sunday night in the United States at 1 a.m. just as markets open, we have the second presidential debate between Hillary Clinton and Donald Trump. Let's see if Trump makes a comeback, perhaps. The media wants these comeback stories, wants to see one side gaining and the other losing, and after they get tired of such headlines, they want the other direction. I believe that Trump prepared. He had a very bad week also after the debate. Remember, yen is influenced by this currency, so if we have by the politics, so if we have Trump victory, I would expect dollar yen to fall, going to the safe haven asset of the yen. And if Clinton beats Trump once again, I expect dollar yen to rise. Also, watch out for the Mexican peso, the currency I don't talk about, but we've seen a reaction. Victory for Clinton is good for the peso, and means a wall back of the currency south of the border. Okay, so that's Monday. Not too many events, but we'll have echoes from the NFP hangover as well. Have the German zoo indicator, and oops, sorry, that's wrong here. The Fed meeting minutes are planned for Wednesday. We'll learn too much because these are minutes from a meeting that was followed by forecasts and the press conference. The more meaningful minutes will come after the November decision. Anyway, but it's still eyed. It's Wednesday at 6 GMT. On Thursday, we have the UK rate decision. Again, some kind of a transitory decision. The more meaningful decision will come in November, when we'll have also the quarterly inflation report by the Bank of England. So we're looking to hear from them is that they're still determined to cut rates despite the improvement in data. So far, Carney has been quite dovish, and most of his members as well. So let's see if this persists. Let's see if everybody votes to keep rates unchanged and what they say in the minutes. Remember, the minutes at the same time as the decision. And on Friday, focus on the US consumer. The US economy is all about buying, consuming. So we have retail sales for the month of September. Consumers actually did last month. And afterwards, we have the initial US consumer sentiment from the University of Michigan and Reuters. That is the last word for the week, always moves markets. So that should be interesting as well. It also has political implications. Remember, consumer sentiment is also influenced by feel things are going. So that is also meaningful. But remember, presidential debate is more important than consumer sentiment. So that was our preview for the week of October to 14th. All right. And now that was I prepared for you. Remember, this is a recorded show with no questions. I'm on the road, but I'll be back. Don't worry, and you can send questions via FX Read. Let me just put details right here. Anyway, on the screen. So you're welcome to contact me via these details. And now let's wrap up the show. So this is a wrap up for the live market open for the week of, for Wednesday, October 5th. We have lots of news coming in for markets. Politics, Clinton is gaining against Trump, that's risk on. OPEC agrees to curb output, that's risk on. Deutsche Bank is in trouble, that's risk off. Hard Brexit. A big breakup between the UK and the EU, that's risk off. So these forces are moving markets in different directions. And recently, we had even a movement from in euro dollar thanks to taper talk. It seems a bit vague to me. Watch out for more headlines, more denials, especially in this space. Notable figures that we had so far. Towards the NFP, we had the ISM manufacturing PMI beating expectations with 51.5, keeping the dollar bid, especially against the pound and the yen. Mostly positive, but some are mediocre, especially growth, which remains weak. Another notable thing to talk about in this wrap is that UK data so far has been much better than expected, but the market ignores it on Brexit talk. Let's do a quick checkup of the charts in this wrap up. 112.20 is the current level in euro dollar, entrenched in range. No other way to describe it. 111.20 and 1 are the current levels in the range, but they're a bit far out. Pound dollar. Here we had a big movement. 127.37. 127 the new low, 127.90 resistance, and maybe we'll see 125 in the not so distant future. Dollar yen has been on the move to the upside. Watch out for 103.40 and 104.14. To the downside, 101 and 100. Dollar CAD for a new direction, 132.40, 132.80 are lines of resistance, support 131.40 and 130 to the downside. The oil story has helped the Canadian dollar, but not as much as you'd expect. Aussie dollar, looking for a new direction, is unable to push higher, 76.36 current level, 76 to the downside, followed by 75 to the upside, 76.60 and 40. Okay, Kiwi dollar lost momentum. Definitely 71.90 is the current level, under 72. Support there at 71.60, 70.50 to the upside, 73.60 and 74.40. So that's the roundup of currencies. Let's take another look at things I'm following. This is the who will win the presidency according to 538. So it's currently 75% for Clinton. It's more interesting, the momentum. They got closer to each other, now further away, higher chances for Clinton to win. And another thing I'm watching is the Fed CME, the chances for rate hikes. So in December, markets are now pricing in, according to bond market, 60% chance in December. The next Fed meeting is 6 days before the elections, so forget about any kind of move. Okay, so that's a recorded show for today. I'll be back with the live show in 2 weeks. I'll have another show, I hope, next week, a recorded one. Thank you, everybody that's watching this recorded show. Wish everybody a safe and successful day at the markets, and a safe and successful week. Trade with care, especially the non-farm payrolls, and watch out for politics in the UK, in the US, and elsewhere. They're beginning to have a wider and wider, a growing and growing impact, I should say. Okay, so that's it for today. Thank you very much for coming, and bye-bye.